Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, July 9th, 2019. I am Frank Ochoa, aka PivotBoss. Before we get to the charts, I want to invite you to our second monthly market outlook of the month. I did not record the last one, so I wanted to offer another opportunity for you all to jump on live, and I wanted to record this one to send it out to whoever did not join. So please join me this afternoon at 3:30 p.m. Central. You can go to pivotboss.ecofin.co to create your free username and password. If you already have one, you can sign in and jump into the PivotBoss community trading room there, and we will host the monthly market outlook live at that time. I will be finding candidates for Q3 and the second half of the year. We'll also go over some of the candidates that we found last week that started off very nicely already. So please join me later on this afternoon at 3:30 p.m. Central Time. It's open and free to everyone who wants to join. All right, let's take a look now at the ES. You'll notice right now that the ES is trading within a very clear uptrending market. We're now pulling back into the PEMA trigger zone at this time as well. So you can see very clear uptrend here that we've seen recently. This is the last time we jumped into the PEMA trigger zone here, and that led to a bounce. We're now there now, and that could also lead to a bounce opportunity for those bulls who want to defend this current pullback. Now, typically speaking, when you get this type of pullback at all-time highs, it can oftentimes be a trap. So bulls that come in here can fail to get this thing bid, and then all of a sudden the stops come out and we see a sell-off of some magnitude. So again, this is an area to be cautious, but for those of you who are bullish, again, this offers a great opportunity in most cases to buy the PEMA pullback trigger zone and defend it for a continuation higher. This offers another one of those opportunities. So overall, we could be looking at least a near-term bounce opportunity, and if it fails, this thing could be headed much lower. So 2960 to 2950 is the zone to watch. This is the same zone we talked about yesterday in the pre-market report. A failure to hold that area would suggest that this bounce is not likely to occur, and we could rotate back down toward 2880, maybe even as low as the 2850 zone. All right, let's take a look at the NQ. Very similar price action for the NQ as well. You can see again a very clear uptrending market here. When this market has bounced off of the PEMA trigger zone, it has gone higher very nicely. We're there again, and this provides another opportunity very similar to the ES for a bounce and a play to perhaps new highs. But again, this is all occurring at all-time highs here. If there's a failure to hold this zone, say the 77.25 zone, that could open up a rotation back down toward the previous month's midpoint, which would take us at about 73.77 in that zone right there. So again, we could be looking at a failure here if this market can't keep bid above the previous month's close of 77.25s. All right, let's take a look now at crude oil. Crude oil has developed a very narrow range over the last 3 to 4 sessions here. If you look down here, the current 4-day range is at 65.44%. So it's just basically a 0.5% over the compression signal. So typically speaking, when you have less than 65% of average range, that is significant compression. The last time we had that here, you can see it led to an explosive move. Over here we had it as well, and it led to a 1-day explosive move. And over here even, it had a very nice move where it broke out then back down. So this market is coiling up for the next move. Another compression signal developing, even though it's not technically below 65%. Again, it's a compressed range nonetheless. The key level to watch here is going to be the previous month's close price, that blue dotted line. That's 58.20. Price got above it yesterday and then rejected. Today the high is 58.19, one tick below that level, and it's starting to show a little bit of weakness off that area. Again, that's going to be the key pivot to watch. Above that level could open up a return back toward recent highs, 60 to 60.25. Above that zone right here would open up a return back down, perhaps retesting the major 55 CLVN or retesting the naked FOMC key level from June 19th at 53.80. So that's going to be the key level to watch, 58.20 right there. That's going to be the zone to watch here heading into the rest of the day. All right, lastly, let's take a look at gold futures. You'll see that gold futures here continues to trade within a very clear trading range. This market continues to hold the 1380 zone up to 1440. A big high range June is leading to a trading range month so far, as we predicted before. Additionally, what you'll notice here is that price is currently showing a little bit of strength off of the low end of the range right now. However, it'd be nice if if price would take out this recent low here. If it were to take out and then reject, it would give a little bit more boost for a potential bounce back up. But as it is right now, we are at a zone where bulls could come in and defend and return this back toward 1440. Overall price is likely to remain between 1375 and 1440. A failure to hold 1375 would open up a return back down. But right now this market has appeared to be quite bullish, and if it can continue to hold that 1375 to 1380 CLVN, we have a shot to see a continuation overall to that 1525 key level. All right, that's it for now. Please join me later on this afternoon at 3:30 p.m. Central for the next monthly market outlook, and I look forward to seeing you then. Take care and trade well.